This is Autoline This Week, the show that gets you inside the global automotive industry. Autoline This Week partnered with the Consulate General of Canada in Detroit to produce this episode.
Hi, I'm John McElroy, and welcome to Autoline This Week. You know, there's always tension between automakers and their suppliers. I suppose that's always going to be the case. Some automakers handle it pretty well, others not. And that's what we're going to be talking about today, because Plante Moran has just released the latest survey results of its supplier working relationship, which shows how different suppliers rate the different automakers. And here to talk with me about it today are Andrea and Mark Barrott. They're both principals with the company Plante Moran, which does accounting, tax, and consulting work. And especially on this side, what we're talking about today is the consulting. Mark, Dave, thanks so much for joining me today. I went through the results of your survey, very interesting. There's a sort of a similar pattern. Toyota and Honda at the top of the list. Suppliers seem to like them the best. General Motors and Ford, somewhat more down in the middle. We'll get into those details. And then Nissan and Stellantis, which includes the Chrysler group of Stellantis, not doing so high, especially Stellantis. I mean, it just plummeted in its ratings in your latest survey. Dave, let me start with you. Whoa, what the heck is going wrong with Stellantis and its suppliers?
Well, first, John, thank you for giving us the opportunity to discuss the results of this year's study. You're right. The order and ranking of the OEMs stayed the same in this year's study. I think one of the major takeaways from it is that with all of the industry issues and all of the tensions that you mentioned here as well, two of the OEMs actually increased their WRI, their Working Relations Index numbers year over year. Two OEMs basically stayed the same, and two of them dropped. So even dealt with the same hand of cards here from the same deck, the OEMs did definitely treat the issues differently.
Yeah. Why do you think Stellantis dropped so much? I mean, I've been following this study for 22 years, the 22 years that it's been coming out. I've never seen a company plummet so fast so far.
Well, you've reported on one of the major issues, which was their terms and conditions, which actually they have rescinded recently, even before seeing the results of the study here. So they did the right thing. They heard the voice of the supplier.
And what that included, they were demanding immediate price cuts, right? And that suppliers had to turn over their intellectual property for any improvements they made on the parts and components that they supplied to Stellantis. And in fact, they even replaced their head of purchasing.
Well, that's a good quick recap of all the issues that were in there. Terms and conditions are supposed to manage risk, right? Balance risk between the two parties. And Stellantis's terms, very definitely skewed the risk to the supply base. And so they heard from that. The other piece that has been reported, certainly with Stellantis here as well, are the pressures on cost reduction and the like in their efforts on electrification. Earlier on, that was really presented more from a shifting the investments over to the supply base. And I think recently here, the tone of those messages has been about cost reduction, actually taking the cost out, not shifting the cost. From that standpoint, and then third, I think behind those numbers is the still the integration of PSA and FCA, and they've been public there too about the need for organizational restructuring and reduction of workforce there, and those issues showed up in the particularly in the elements of the buyer characteristics that roll up into the WRI.
Yeah, it's interesting, everything that you're talking about there, but I've never seen a car company back off so quickly, replace its head of purchasing and make those changes. And I'm bringing that up because one of the things that comes out of your survey is the importance of trust between an automaker and its suppliers? Why is that so important?
Well, trust and look at all of the workarounds and all of the requests that had to be dealt with over the last 18 to 24 months here. None of this was scripted, right? In terms of the microchip shortages or the logistics issues at the ports and the like, or material cost inflation, thinking about the steel prices and other material. And so from there, you need trust, right? In terms of dealing with all of those issues that come up in the industry, and now we're facing these issues simultaneously, which is another, I think, a really big difference. The industry has always handled these issues, right? But they're simultaneous now, so you need trust. When we first took over the survey here and I presented that to the OEMs, they all came back at me and said, well, what's trust, right? That's really soft, it's nebulous. What really is it? And so we went back and we did additional research, and it comes down to three key issues. It comes about in terms of putting forward realistic expectations in terms of what the two parties need to deliver on. It comes down to accountability, saying what you're going to do, and fulfilling those commitments. And then the third is sharing information adequately for both parties to deal with these issues. And what we see, John, is that it's a two-way street, right? So the OEMs that do those things well, realistic expectations, accountability, and also share the information. The suppliers, in turn, then also do those three things. And so the gap, when we ask about the gap between how do the OEMs, your customer, behave, and how do you behave in response to those behaviors, we see that the gap is the smallest between Toyota and as you go down the WRI rankings, it's the largest with Nissan and Stellantis.
Mm-hmm. Mark, you really specialize in the supplier industry's transition to electric vehicles. How's that working out in terms of what Dave was just talking, having realistic expectations, good communication, and following up and doing on what you said you were going to do?
Thanks, John. It's interesting that I think we're in the early stages of that still, as of now. But what's interesting from the EV transition and the WRI survey is all of the results take place against that backdrop of this massive shift in the supply chain and in the products. And some suppliers will make that shift easily and are making that shift. Some will find more difficult. You'll see that kind of relationship reflected. It's interesting when you think of the massive battery plant investments which are underway right now with GM, Ford, Stellantis, and others, and you'll see they've selected their joint venture partners with the mainly Asian battery manufacturers right now. That's a big shift in the way that a OEM has a relationship with a supplier in such an important component of the vehicle. And so one of the things we're looking forward to going forward in the next time we do this surveys is how is the relationship with GM with an Ultium? Does GM treat Ultium like it treats other suppliers or not? That's going to be very interesting. But as far as the impact on traditional suppliers and how they responded in the WRI, I would say it's very much along the lines of just the trust factor that Dave was describing. Is there really that much information out there? How do we trust your projections yet on the growth of EVs? How much do we need to invest in capital while we're still dealing with the supply chain issues and the shortages and the material cost, and frankly, even that's exacerbated almost in the battery world because of the raw material access and the volatility of raw materials in a battery. So still to be determined, but we're looking at that one very closely.
Dave,
I was just going to pick up on that. Is in those issues that Mark ran through, that's where the corporate policies and procedures need to support the buyers and the procurement group, and just from the standpoint of supporting a supplier who does step forward, make major investments, and the EV programs are at risk, right, in terms of how they're going to come out. So if there's any sunk costs in terms of stranded investment, that the OEM shares in that risk, or if volumes don't turn out, which have always been a tension point between the suppliers and the OEMs, that some risk sharing goes on, or cost sharing, if those volumes do not come to fruition.
There's always going to be tension for the very issues that you just cited there between automakers and suppliers. But is there any kind of correlation that you can point to that good supplier relationships benefit a company or even put more money to the bottom line?
Well, there is, in terms of thinking about the correlation, right, between good supplier relations and a financial return. Case in point, I think, which shows up in this year's survey, right in the middle of this year's industry issues here. For example, Toyota has been put forward as having managed well their contingency plans down through the supply chain, in terms of for the microchip shortages, and so down the line, and you can pick 10 other supply chain risks that they have contingency plans for. If the OEM does not have the trust of the supplier to put that information into those contingency plans and keep those contingency plans current and accurate, there's no way that you can cascade that down from, first tier is hard enough, but then get that information second tier and third tier. The OEM really sets the stage of all of those behaviors down the line. So that's one element that I would give you, John, that where there is financial return. Mm-hmm. And we do in this survey also ask about supplier derived benefits. So thinking about putting your supplier's A team on launches, and thinking about all of the launches that still occurred through the last 18 months or 24 months here. That's the way the supplier relations, that's the return on investment. Mm-hmm. From that standpoint.
Mark, do you see the same thing on the electrification side, in the sense that automakers traditionally have only dealt with the tier one suppliers? That's why they're called tier one. They sell or deliver directly to the automakers. As you go down the other tiers, those are suppliers supplying suppliers. But I think the automakers learned from the chip shortage. They were buying chips not from the chip companies. They were buying them from different suppliers that had bought the chips themselves. How about when it comes to the raw materials for batteries? Are you seeing automakers looking beyond just the tier ones?
Oh, absolutely, yes. I mean, I think what you're seeing is a really interesting new area for automakers to explore, which is going directly to the raw material extractors in some cases. You've recently seen, I think it was GM's relationship with Glencore, which was announced a couple of weeks ago, which is really directly to the raw material supplier of the extractors. You've seen, I think GM also been active in the lithium in the Salton Sea out in California. So that is a new area, and related to the WRI, that's an area of purchasing that the OEMs are probably not that experienced in right now. Mm-hmm. The volatility, we've seen some areas where historically OEMs have hedged in certain materials, but this is a new area where the exploration is still new. Certainly in the US, the supply chain globally is difficult with the geopolitical tensions, and it's an expertise that the OEMs really start to need to grasp quickly. And I think they will start to be seeing, as you look at look at Ford, for example, as they split between ICE and EV, the buyers in the EV side are certainly going to have some knowledge, expertise, and understanding of the commodities market, the raw materials, moving forward. So that'll be interesting to watch.
Yeah, Dave, that buyer knowledge was something that came out in the survey too that I found very interesting. I mean, it's one thing when you're talking batteries and buyers are getting into areas they never knew before. They never had to buy lithium or manganese or cobalt or things like that. But what your survey showed is even on traditional kinds of parts and components, there's been a lack of buyer knowledge, the purchasing buyer at the car company not knowing it. And it seems to be impacted by turnover. And I'd like you to fill out the details on this, but it seems like the two companies at the top of your survey, Toyota and Honda, tend to keep buyers in place, whereas, the Detroit three turned them over. And as you know, there's a reason for that. They're afraid that their own buyers are going to get a little too palsy-walsy with the supplier. And we've also seen areas of corruption, when you have that too comfortable of a relationship. So how do you increase your buyer's knowledge and avoid those kinds of issues?
Right. So on the top of your question there, John, without a doubt, it came from all the industry turnover in terms of their organizational turnover. Some of it also came about in terms of the COVID restrictions on traveling and getting out to the plants to really understand the suppliers' products and things like that, and vice versa for the suppliers to get into the OEM facilities and engineering facilities and the like there. But first I would push back a little bit on the corruption and some of those elements. Those are real issues, but exceptions.
I agree. Okay, they don't happen much, but it's a reason why they do turn them over.
But the middle part of your question about in terms of the becoming the pals of the suppliers and not getting the best price and those types of things, what the industry needs there is the checks and balances, right? It needs purchasing working with engineering and then working with cost estimating and manufacturing and quality. And if all of those groups, if there's no light in between those groups and they're all working with the suppliers, they're all aligned from that side, that's your checks and balances, right? Because you're not going to get, you can see if there is any kind of exploiting any kind of relationship there, right? There's more people in the room, but you also check quality with engineering innovation, with trying to get the lowest price, but not delivering on the other elements. So that's, and many of the companies have started, like Ford's Match Pair program, right? That matches a purchasing person at each level with someone in engineering. That's one example of how you get around that.
Yeah. One of the things that you brought out in the survey, Dave, is the COVID example. How this industry, the auto industry, especially, the Detroit-based automakers, turned on a dime and started cranking out masks and respirators and things like that. And you use that as an example of how this industry between automaker and supplier can get things done very quickly. How do you inculcate that kind of approach in normal everyday things, not just when there's an emergency, or can you?
Well, yeah, you don't want it always to be a crisis situation, right? To bring out the best in people. But I think there's a couple of things. One is because we have had such a continuous number of crises facing the industry, these war rooms that have been put together, right, in terms of for cross communication to get the best information out of the organizations on the supplier and OEM side as quickly as possible. It's that mentality that I think the industry approaches every day-to-day issue or decision on, and this is one that comes back to, I think, that we saw in the survey, that comes back to an earlier observation you made, John, was on the buyer knowledge side. The issue about closing, the ability to close issues quickly whether it be a pricing dispute or a tooling dispute, or material cost inflation recovery from that standpoint. There was definitely a bottleneck there in terms of human resources to get those issues closed. And then again, I go back to it's the business practices, the corporate policies that have to be aligned with those the human resources to push those issues through the system, get them resolved, get the teams moved on to the real creative part of the industry in terms of the designing, engineering, and production of these new vehicles that are coming at us.
Yeah, Mark, how do you see that happening on the electrification side? I mean, all automakers have very ambitious goals to sell electric cars, but they need batteries. And that seems to be a potential bottleneck that the industry is facing. Hasn't hit home quite yet, but with some of the startups it has, but not with the traditionals. But this could be a big bottleneck for them too. Do you see them working on resolving that?
It's, job one, job two, thinking about the investments the Detroit 3 are making in battery plants announced and still to be announced, we expect, is you see the vehicle launches through this decade and certainly into next, we're likely to get to a point where current announced plans will be insufficient to meet the needs of the battery manufacturers, of the traditional OEMs, let alone the startups. So the announcements you see are to get us through this decade. And then beyond that, we'll be looking to additional plant announcements, additional locations. We're already seeing Canada opening up with Stellantis over there in Windsor. So that's a bottleneck that will be resolved. The automakers already have a line of sight to what their forecasts are, a line of sight beyond the end of 2030 to what their volumes are likely to be. I worry more for the startups and their access to good battery technology and continuing research and development and different types of chemistries, cheaper chemistries and cheaper batteries that may be sucked up by the larger OEMs. That's where I worry, and that's why I think some of the startup OEMs really need to be extracting and making the relationships with a number of the more innovative battery manufacturers as we move forward. They'll have to be it's almost like a captive, non-captive battery market. The captives being the JVs with the GMs, Fords, Stellantis, etc., and the non-captive being independent battery manufacturers who will sell to startups. That is a market that's starting to pick up. But right now, as you say, we're not matched, but we'll get to a point where those lines cross pretty soon. So probably late in this decade, going into the next decade.
Yeah, and that's another area where you have a return on investment for supplier relations, right? Because you have the relationships with these suppliers that whether it's from some of the technology and R&D and intellectual property side you're seeing, or from production capacity, come online for the OEMs, whether it's a legacy firm or a new startup, to get the product onto the market. And then those are the firms that will get the capital flowing to them. And so there's another area where supplier relations pay off.
Dave, we're down to the last couple of minutes here. What advice would you give to automakers on how they can improve their supplier relationships?
Well, it always comes down to alignment from the top down through the purchasing organization there. What we're seeing when we saw, I think with Nissan make its moves year over year here, it's also alignment back to the parent company.
And Nissan was going up in this case.
Yeah, correct. And that's important. That's very difficult first to establish and then to have it ingrained, institutionalized to continue on. So it's vertical integration and alignment as well as horizontal. and that's where you can bring the different functions together, and it can't be about finger pointing. It's really about what we're talking about here of bringing this new technology to the market in the most cost-effective manner. And so you're taking that friction, you're really looking at the friction at the interface between the supplier and the OEM. Short answer, top leadership has to get behind it as well. And then I think is look at these new challenges that Mark has talked about and think about how do your purchasing organizations need to evolve to match up with this new supply base that purchasing will need to deal with in the next 5 to 10 years.
Yeah. And with that, I'm afraid we're going to have to wrap up, but that's a good point to end on. Dave, Andrea, Mark Barrott from Plante Moran, thanks so much for sharing the results of your latest supplier working ship survey. Very interesting findings in it.
Very good. Thank you, John.
Thank you, John.
Autoline This Week partnered with the Consulate General of Canada in Detroit to produce this episode.